I might carry 12 positions, maybe, maybe more. It depends on the liquidity. If a whole bunch of the best names are really thin, well, then who knows? I might have 20 or 25, but generally that's not what happens, but it's a mix. So I'm going to try to plow in as much money as I possibly can in the absolute best situations. Hopefully I can get all my money in 4 stocks, cash, 8 stocks margin. Now, if you're, of course, managing a fund, hedge fund's not going to be able to do that too easily. You're going to have more diversification, and you're going to have a liquidity problem. But that's exactly why the individual investor has a gigantic advantage, because you don't have that liquidity problem. And if you're only trading a few thousand shares, or even 5 or 10,000 shares, you relatively can get into a stock pretty easily. So anyway, the answer is that I may have 20 positions, but generally I'm trying to get my money in 4, 5, or 8 positions, and maybe up to 12 positions. It plays a huge role. I'm looking for the same thing as most growth managers are looking for. We're looking for growth, which is driven by sales. Sometimes you have it driven by cost cutting or some other factor that is more temporary than long-term growth and expansion. Margins are important too. If you're improving margins and you're accelerating your sales, that leads to an acceleration in your earnings. However, there's some situations that I may trade, and during certain periods that growth is not there, where I may switch over to earnings estimate revisions. That's an important factor, and they play off of each other. And then there's also I use what I call relative prioritizing, and that simply means that under certain conditions, one factor may be strong enough to override another factor. For instance, if a stock has a tremendous relative strength, it's in a great group, we're in a great market, or I think we're starting a new bull market, and it's got a perfect chart pattern, but maybe it's a biotech stock and it has no earnings, I'm probably going to be in that name. So I may disregard the earnings because the technicals and the group and the market are so strong. So it's somewhat of a balancing act. But the earnings are a big part, and I'm generally looking for some kind of earnings surprise prior to where I'm buying, some kind of indication that something good's happening, and then I want to find some indication that it's going to continue. Okay, I think that those are great questions. The emotion coming out of your trading comes from having a plan, and going back to what I spoke about before. If you have a plan, you have a sound plan, you have to start with some sound rules. If you have a plan, then a lot of that emotion comes out. If you have a contingency plan and those decisions are made ahead of time, then when that time comes, you're simply just carrying out your plan. That's one of the reasons why you need to have that contingency plan. That's one of the reasons why you need to have that hard stop. It's one of the reasons why you need to have some of those rules, because you're going to get emotional, and you're going to have clouded judgment. I mean, over the years, I've been doing this for a lot of years now, almost 3 decades. So I don't have much emotion anymore, because I have rules and I have contingencies for just about everything. Although it's impossible to say that, I wouldn't say I'm never emotional, but it doesn't dictate my trading. Early on, I had an entire room full of, broken computers and phones and chairs, and so there was a lot of screaming and yelling that went on. So, and I think most traders can probably relate to that. But over the years, frustration. As far as frustration, the only frustration that I get is if I don't follow my plan. I would rather lose following my plan than do something outside my plan and make money, because I know that if I do it outside my plan and I make money, I probably just got lucky, and over time I'll eventually give all that back. But if I stick with my plan, I know that that's a sure thing that I'm going to make money over time. I know I have a good plan, I have good principles. Doesn't mean it's going to work all the time. So my frustration comes if I break my own rules, which I try never to do, but of course we're all just human, and we have to slip up every now and then. Okay, well, that's the $64,000 question. And how do I let my winners run consistently? I don't let my winners run consistently. I don't consistently have big winners, and you don't have to. So once again, you have to sacrifice. You have to figure out what your game is. And if you're looking to have big winners offset losses, well, then you're going to have to give up some of those 10 or 15% profits that you're speaking about. However, if you're looking to have a higher volume of smaller winners, well, then you can give up that bigger move and still accomplish the same result or maybe more. It's like you have a Ferrari dealership and you have a bubblegum store. The bubblegum store sells bubblegums for 10 cents a piece. The Ferrari sells Ferraris for $200,000 each. Obviously, their profit margins are different and their turnover is different. The bubblegum salesman is going to sell a hell of a lot more bubblegum than the Ferrari is going to sell Ferraris. However, does that mean that the bubblegum guy makes more or less money than the Ferrari dealership? It depends. It depends how much he rolls over packs of gum he sells or how many Ferraris are sold. So it doesn't really matter. It matters that that reward is a multiple of what you're risking on average, and that your batting average justifies it. So when I get to a certain point, let's just say it's the 15%, how you asked about. When I get to that 15%, I'm gonna take a look and see where am I in relation to what I risked. Where am I in relation to what I generally return on average? My own personal bell curve, which encompasses everything. It encompasses my emotions. It encompasses my strategy. It's what I produce. If I'm at a large multiple of that, well, I'm going to protect that. And now I might trail some kind of stop below it to protect at least the majority of it. I'm certainly going to not let it turn into a loss. If it happens to just keep me in and turn into a big winner, well, fine. Then that's how I'll end up at that 50% gain. But it's not just a black or white decision. So it's really important to know where you are relative to what you produce and make a decision. Are you a trader? Are you an investor? Are you a swing trader? A day trader? I do trade around positions. One way you can do it is you can take a position and then in your mind you say, okay, half the position is a trade, half of it is a investment or a swing. And then you trade out that first half, and that second half you use those wider parameters. That's one way of doing it.